Does it ever feel like you're working harder than ever, maybe even earning a solid six-figure salary like $150,000, but you're just treading water financially? Like no matter how much you earn, you're not getting ahead? You're not imagining it. There's an invisible force at play, a silent thief that's eroding your wealth right under your nose. It's often called the inflation tax, and today we're going to expose exactly how it's making your $150,000 income feel a lot less powerful than it should. We'll break down the hidden costs, reveal why official numbers don't tell the whole story, and most importantly, give you strategies to fight back. Stay tuned, because understanding this is the first step to truly protecting your financial future. Let's start with a hard truth, that a $150,000 salary is not what it used to be. You might see that number on your paycheck and feel a sense of security, but the reality of what it can buy has changed dramatically. This is the core of the problem. You feel poorer, even with a high income, because your purchasing power is shrinking. And here's why the official numbers you hear on the news, like the Consumer Price Index or CPI, don't capture your personal reality. The CPI is an average, a basket of goods that might not reflect your specific spending. For a family earning six figures, the things that make up the biggest chunk of your budget, housing, quality food, childcare, saving for college, have often seen their prices skyrocket far beyond that official average. This video will prove why that feeling in your gut is correct. Your money is not going as far as it should. So, what exactly is this inflation tax? First, it's not a tax you'll see on a form from the government. You can't deduct it. It's a hidden levy on your wealth. It works in two ways. First, and most obviously, prices for everything go up. Your dollar simply buys less. But the second part is even more insidious. It erodes the value of the money you've already saved. Every dollar sitting in your savings account or under your mattress is losing purchasing power every single day. A primary driver of this is the massive creation of new money. When governments and central banks inject trillions of dollars into the economy, it dilutes the value of all the existing dollars. Think of it like this. If you have a pie and you keep adding more and more people who get a slice, each person's slice gets smaller. It's the same with money. More dollars chasing the same amount of goods and services means prices have to go up. This creates a two-pronged attack. The cost of living rises, and the value of your savings falls. It's a powerful combination that quietly transfers wealth away from savers and wage earners. Now let's get specific and look at the invisible costs squeezing a middle-class budget, even one supported by a $150,000 income. First, housing headaches. Maybe you have a fixed-rate mortgage and you think you're safe, but the value of that fixed payment relative to your income has changed. Property taxes and insurance have likely soared. And if you're looking to move or are renting, you know the market is brutal. Housing costs are eating up a much larger percentage of that $150K than they did just a few years ago. Then there's the grocery cart shock. It's not just a few cents here and there. The price of essentials like eggs, meat, and bread has seen exponential increases. A grocery bill that was once $150 a week might now be $250 or more for the same items. This disproportionately impacts your budget because you can't just stop eating. And we can't forget transportation troubles. The cost of gas is the obvious one, but car maintenance, insurance, and even the price of a new or used car have exploded. Each of these categories individually might seem manageable, but when they all compound at once, they siphon away a massive chunk of your disposable income before you even have a chance to spend it. This leads to what I call the treadmill effect, the feeling that you're running faster and faster just to stay in the same place. This is why working harder often isn't enough. Let's talk about your annual raise. You might get a 3% or 4% raise and feel good about it. But if the official inflation rate is 3% and the real inflation rate for your lifestyle is closer to 7% or 8%, that raise didn't even keep you level. You actually got a pay cut in terms of purchasing power. This is the illusion of progress. You're making more money, but you can afford less. This is also where the lifestyle creep trap becomes so dangerous. As your income rose to 150K, your expectations and necessities likely rose with it. Maybe you moved to a better school district, needed a more reliable car, or had children. These aren't extravagant luxuries. They're the pillars of a middle-class life. But the cost of those pillars has risen so fast that a $150,000 income, which once seemed like a ticket to comfort, now feels like the bare minimum just to get by. It is why hitting financial milestones like buying a home or comfortably saving for retirement feels so much harder now, despite having what is, on paper, a very solid income. So, how do we fight back? It can feel hopeless, but it's not. You have to be proactive. The first step is to inflation-proof your investments. Leaving your money in a standard savings account is a guaranteed way to lose purchasing power. You need to allocate your money in a way that aims to beat the inflation tax, not just keep pace with it. This means looking at assets that have historically performed well during inflationary periods. I'm not a financial advisor, so do your own research, but this could include things like real estate, certain stocks, and inflation-protected securities. The goal is to make your money work harder for you than inflation is working against you. Knowledge is your best weapon here. Next, you need to change how you think about your salary. When you're negotiating a raise or a new job offer, you have to negotiate for your real value. Don't just look at the percentage increase. Calculate what that increase means. After taking into account the real inflation you're experiencing, you can bring data to the table. Show them the increase in housing, food, and transportation costs in your area. Frame the conversation not just as wanting more money, but as needing to maintain your standard of living in the face of rapidly rising costs. A 5% raise might sound good, but if your real cost of living went up 8%, you need to aim higher to secure a truly impactful increase. Don't be afraid to advocate for yourself based on the economic reality we're all facing. Finally, you must get surgical with your budget to account for the unseen. This isn't about cutting out your morning coffee. This is about identifying and mitigating the major hidden costs of inflation. Track your spending for a month, not just by category, but by looking at how prices have changed over time for your specific purchases. Are you spending 40% more on groceries than you were 2 years ago? Is your car insurance up 25%? Seeing these numbers in black and white is powerful. Once you identify the biggest drains, you can strategize. Can you shop at a different grocery store? Can you bundle insurance or shop for a better rate? Can you refinance debt to a lower interest rate? This is about being a strategic CEO of your own household finances, actively looking for leaks and plugging them. It requires effort, but this proactive approach is how you take back control from the silent thief of inflation and start making your $150,000 income work for you again, not against you. To wrap this all up, the inflation tax is real, and it's hitting households with incomes like $150,000 especially hard because it erodes both your current lifestyle and your future wealth. But by understanding what it is, seeing how it works through hidden costs in your daily life, and recognizing the treadmill effect of insufficient raises, you can start to build a defense. It's about investing smarter, negotiating for your real worth, and budgeting with a keen eye on the true cost of living. It's not an easy fight, but it's one you can win. Don't let your hard work be erased by forces you can't see. Take control, get educated, and protect your financial future. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe for more content on how to navigate this crazy economy. Let me know in the comments what hidden costs you've noticed the most. See you in the next one.